Hi there, welcome to Kneppy Invest and welcome to October 25, 2024, a day also known as my sister's birthday. Pamela turns 23 today, wink, wink, and I hope she's had a brilliant day. She deserves it. All people deserve a brilliant day on their birthday, to be honest with you. Now, we have about 35 minutes left of trading today. And overall, today has been quite good. No complaints from me at all. Tech's had a pretty good day, and more than likely that's because of one company, which I will touch upon during this video. Now, the agenda in today's video is fairly identical, fairly similar than other of these ASX Daily Rundown videos. Go through the ASX today, look at the best and worst performing sectors, indices, and also companies, and then we'll go through the top 5 stocks of the day. I took my time deciding the top 5 stocks. So I had a lot of choices here. Lots and lots of choices. I think I've come up with a pretty good top 5. Now, not all 5 companies are on the ASX. There is one company that is not, and maybe I should rename this to something other than ASX Daily Rundown video, if that is the case. But you'll see why I have included this company. One of the most popular companies in the world. And then we'll have a look at some charts, go through the honourable mentions, companies that did not make it, and then maybe I'll go through a few of your comments. Okay, so let's get stuck into it. What I'm going to do first is I'm going to go to trading economics just to see if there's been any economic news today that could explain movements in not only the markets but also commodities. Maybe a quick look at commodities right now. Silver's down, which is okay because it's been on a pretty good run. The other thing I'm looking at here is iron ore down a little bit. And also oil up slightly. They do mention here oil set for weekly gain. Also, Japanese shares fall ahead of general election. And Tokyo inflation hits 6-month low. Another, probably one of the most interesting ones here is US unemployment claims drop sharply. That is probably the most significant one. In fact, whenever I see any information when it comes to the labor market, I am paying more attention because labor market ultimately drives economies into or out of recessions. It's mostly to do with the labor market, which makes sense because if there's more people unemployed, there's less people spending. And the government doesn't want that. In fact, the government wants you to spend as much as possible, which is sort of weird as an investor because we try to save and invest so we have more money when we retire, but the government wants you to spend and spend and spend because that's good for the economy. So sort of I wouldn't say it's a catch-22, but it's sort of, we're getting mixed messages, always getting mixed messages. Spend, 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 but save for your retirement on the other hand. Okay, so I think it's a good balance. There's a nice balance there. Okay, won't go through Capital Brief, but I will touch upon earnings report NASDAQ because we're entering a really important period. This happens every 3 months when it comes to the United States because next week is when all, maybe not all, but most of the big companies report. So this is the earnings calendar. So today, or the 25th of October, nothing much. Colgate, Palmolive, market cap of $80 billion. Anything else here of interest? Nothing much. Dr. Reddy's Laboratories, AutoNation, Nebulous, so many companies I've never heard of. But once we go to next week, not necessarily Monday, we do have a few big companies there, including Fomento Económico Mexicano. That's a big bank or something in Mexico. And Ford Motor Company is also reporting next Monday. But it's Tuesday, Wednesday, Thursday. Just look at the companies reporting on these 3 days. On the Tuesday, Alphabet, market cap $2 billion. Visa, market cap of $517 billion. And then we have even Advanced Micro Devices, Novartis, McDonald's, Pfizer, HSBC, and Chubb, Bud, Anheuser-Busch, or Bush, BP, PayPal, Chipotle, Mexican Grill. Oh, it's just name after name here. And then we go to Wednesday, and we have Microsoft, Meta Platforms, Eli Lilly, Abivai, Caterpillar, Booking Holdings, Starbucks, UBS. What else is there? DoorDash, which has a market cap of $62 billion, by the way. $62 billion. And anything else there? No, Kraft Heinz. And then on Thursday, Apple, Amazon, MasterCard, Merck and Company, Shell, Uber, Comcast, ConocoPhillips, Bristol Myers Squibb. Oh, it's just Intel, company after company reporting next week. So one of the busiest or more important weeks when it comes to equity markets in the world. So really looking forward to see how these companies perform. We had a very important company report overnight. Well, not overnight, last night. Yeah, yesterday. Yeah, like 24 hours ago. And I will touch upon that company when we get to the top 5 stocks today. You probably should know what company I'll be talking about. Okay, so let's get to the ASX today. We'll have a look at the best and worst performing sectors and indices first, just to see what's driven the market, up or down. Well, not down because everything's up. Although I've just noticed here, XTX has been drifting lower all through the day. So a little bit of selling. Maybe American futures are down. Maybe, I don't know. I could have a look, but I don't care. Anyway, sectors, IT, up 3.37%. That is because of WiseTech. I'll talk about WiseTech in a second. Healthcare, pretty good day. So healthcare has been having a pretty good week, I think. Let's have a look at healthcare. No, I lied. So it's down 1%. In fact, the last week, everything's down. IT is down 5. I didn't realize we had such a bad week. Is that right? Have we had a really bad week? That seems wrong. XJO, we are down. XJO is down 0.74% for the week. I don't know. It looks like it's down more if you look at this. Staples flat, but everything else is down big. The month, yeah, healthcare's had a pretty good month, just behind materials. That's probably what I'm thinking about. Anyway, let's go back to the daily. And Staples, which is defensive, is the worst performing sector today. Maybe Woolworths, Coles, Wesfarmers down. Okay, let's have a look at the indices. Tech, yeah, good. Small caps, good. Where's gold here? Where's gold? Oh, gold's not had a good day. I wonder if that's because of Newmont. Newmont's down another 10% last time we looked. So they released their quarterly report yesterday, and share price dropped. Then the share price dropped overnight on the American market, and then we dropped because they dropped. I don't know. Dropped another 12%, I think, last time I looked. We'll have a closer look at Newmont's chart when we go to the honourable mention chart section of the video. And the ASX 20 flat, in fact, down 0.01%. I assume we're going to have maybe, I'm going to say 11 companies up, 9 down. Oh, 13 up, 7 down. So there's a little bit, that does seem a little bit weird. 13 companies up, 7 down, yet it is down. So that means we've seen significant falls in companies compared to rises, or the bigger companies have fallen, not risen. So let's have a look at the best and worst performing companies in the ASX 20. Oh yeah, WiseTech. There you go. I didn't want to actually speak about or look at WiseTech until we got to it, and that's why. Well, that's not why. 13 up, 7 down, but 12 up 12.73%. Aristocrat also up 2.93%. Then everything else is only up below 0.6%. But if we have a look at the biggest falls, we have quite a few companies down a fair bit. Wesfarmers, Woolworths, again, Staples, Brambles, Transurban, Telstra, all down by more than 0.6%. And that's why we don't see many companies down, yet the ASX 20 is down overall, because some of these companies are pretty big. Well, actually, every single company in the ASX 20 is pretty big. Okay, so let's get to my favorite part of the video, the best and worst performing companies on the ASX today. I like this because very rarely do I go through this before I start recording. So on occasion, I do get surprised. So what I'm doing here is looking at the top gainers by percentage change, and then I'll have a look at the top gainers by market cap, which you might say, how do you do that? Well, they have a list, or Market Index has a list of companies here. It's not massively long. I'm not sure how many companies it is. Maybe it's like 50 companies, or maybe it's a little bit more than that. It seems like it's more than that. And then you just list it by market cap. So that's what I'll do. Anyway, percentage change. Company called Energy World Corporation up 66%, but low turnover. So let's move past that. Advanced Metals. So we're getting to the first company that I've never heard of before. Share price up 53.57%. Turnover $1 million. So something has happened to this company. Markup 7.25 million. So what could this company have released? Usually, if the share price rallies like this, I'd say the most likely is drilling results. Second most likely reason could be a takeover. Probably not that likely for this type of company, but it can happen. Another reason could be an acquisition. Maybe they bought a project or a mine that's near a production, that sort of thing. And those sort of acquisitions can be company making. In fact, Northern Star did that 15, 14 years ago. Northern Star was really small. Then they acquired, I forget who they acquired it off. They acquired a project or a mine that was near production, and they just grew from that. Okay, so let's have a look at Advanced Metals, AVM, a company I've never heard of before. And let's see what they released today to get the market excited. Okay, acquisition of high-grade silver and gold project in Mexico. There it is. It's an acquisition in Mexico. I won't open this up. If you do like these sort of companies, mining companies, exploring companies, or maybe you really like mining companies or explorers who acquire a project, and maybe this project is near production. So let's have a look at the chart for AVM. Is it a reason to get excited about this company? We won't have a look at the weekly chart. We'll go back to the daily chart. And, well, it's share price has been going sideways for or throughout most of 2024, in fact. So this could be a bit of a breakout. It could be. Advanced Metals. I'll put this onto my watch list just so I can follow it for future reference. Okay, let's go back to the top gainers. What else? Redcastle. There is okay turnover there. Maybe I'll have a quick look. I'm not sure. Share price is fairly low. Yeah, they haven't released anything, so let's move on to the next one. Yeah, nothing much else here. I'm going to move on past Australian Gold and Copper because that has been share price has been up and down a fair bit. WA1 Resources up 16.6% on 7 pretty big turnover. I'm pretty sure they released their quarterly. Well, they might have released it yesterday. No, they did release it today. So core activities and cash flow report. This company has no cash receipts. They're not in production just yet. But for some reason, the market has liked it. Share price up 17.8%. Now, this could be an interesting chart. It hasn't really popped up on any of my screeners lately or scanners, and this is why. Share price has actually moved into a bit of a short term, at least a short term downtrend. And today, share price is just getting back up to where it was 6 trading days ago. So I wouldn't get excited about this particular day, not massive volume coming in. It could be just a little bit of a bounce in the burgeoning moments of a new downtrend for WA1 Resources. Secos. Did I mention Secos yesterday? Secos, actually, I don't think I did. This is not a packaging company. They developed stuff to put your food in if you go to Woolworths and Coles and those sort of thing. So whatever. Compostable, that's the word I was looking at. Compostable shopping bags, that's what they make. Yes, we finally got there. So Secos expands supply of compostable shopping bags. They also did a sales update 8 days ago. And I noticed share price actually went up 15.4% yesterday. I just forgot to talk about it. And the share price is up another 16.7% today. So a little bit of a movement in this company. Now, I'm not sure the chart is going to look good just yet. SES, I want to thank all those people who actually do work with or volunteer with the SES and save people's lives and protect people's property, that sort of thing. Anyway, so this is a completely different company. So share price has been a downtrend. Share price has been on a bit of a run. Is this, but in the past, you see share price go on runs. You see this all the time in downtrends. And this is probably the most interesting run the share price has been on for a while. Pretty big spikes in volume, but it's not consistent. So you see spikes in volume, then volume goes right back down. So this could be just a few, someone just buying, maybe it's a fund manager just buying some shares. I don't know. Not quite a breakout just yet. I might need to see the share price not drop back down And the other thing I probably want to do with this company is do a little bit more research. Has these compostable shopping bags, can they gain even further traction? Are they good? That's the other thing. Are they good? So that's Secos. Anyway, let's move down. Quite a few big companies. We have Gallon Lithium, 16%. Sierra Resources is up 15.3%. Don't get excited about that. LBT Innovations, they released an announcement a week ago, 2 weeks ago, that I actually did like because they sold one of the devices to, who was it? It was someone big. I think it was Bristol Squires Squibb, or whatever that's called. Squires, whatever it's called, yeah. And they're they're doing their Bristol Myers Squibb. Yeah, they're releasing their quarterly next week. I'm just going to have a quick look at LBT Innovations because share prices are up. Is the share price moving up, going on a bit of a run? And the answer to that is no. We can move on. Mad pause. No, don't care. Okay, so let's have a look. Ooh, DGL Group up another 12.3%. Go DGL. Okay, so let's have a look by market cap just to see if there's any bigger companies have had a good day today. So WiseTech, HMC Capital. Okay, so that company's up 10.75%. And I will be talking about that company when we get to the top 5 stocks of the day. Clarity Pharmaceuticals. I discussed Clarity yesterday. There was a question about $6.50, and it looks like $6.50 was a nice little support level. And both the original poster or whoever wrote that question and I agreed that $6.50 was an important level, and it could go either way. It could drop below that, or it could go on a rally. And maybe today we have received an answer. Clarity Pharmaceuticals up 7.4%, and share price now $7.20. So those who probably wanted to sell or had to sell because they were fearful the share price was going to drop, they now have left, and there's no longer any pressure on the share price. So let's have a quick look at Clarity Pharmaceuticals. Is this the end of this short-term downtrend? Possibly, just possibly. But today is a good day. I probably would have preferred a little bit more volume. Okay, what else we have? Your Tourism Holdings. Actually, I did have this opened up. Let's have a look. No, they had the annual meeting last week. Okay, what else we have here? Metals X. There was a question about Metals X, I believe. Somewhere here. There it is, Metals X. Mr. Chokeson asked me a question about Metals X, and lo and behold, Metals X is up 9.4% today. I might discuss Metals X if I get to the comment part of this particular video. And there's DGL again. Go DGL. Okay, so let's get to the biggest losers, the top losers on the ASX today. Initially, or the first company that has dropped the most is on low turnover. Then we have a company called Horizon Minerals, down 19% on pretty good turnover. I'm going to have and the market cap's not that low, it's 57 million. I'm going to have a quick look at Horizon Minerals, see if they've released anything negative today. And, they've released quite a bit. There is a merger. Merger alert. Horizon and Poseidon merging to create mid-cap producer. Seems like Horizon Minerals shareholders don't like this merger. Maybe they don't like Poseidon. There's a presentation, 147-page document. I'm not going to open that up. What's happened with Poseidon? What's their ticker code? Poseidon. I just think of the Poseidon Adventure with I can't spell it. With Gene Hackman, who was, I'm pretty sure he was, if I remember correctly, I'm just delving deep into my memory. Poseidon Adventure, was it Poseidon Adventure? Yeah, on the boat, and I'm pretty sure he was like a preacher or a priest or something. I'm pretty sure that was released in 1974. Oh man, Poseidon Adventure, 1972. Close, 1972. Reverend. He was a reverend. There we go. Shelley Winters, Ernest Bonine. There we go. And the rest I don't know. Never heard of. Okay, so a bit of a tangent there. Anyway, Poseidon Nickel's down also 25%. So it seems like the Poseidon Nickel shouters and Horizon Mineral shouters say, this merger sucks. We don't like it. Both companies down a lot. Anyway. What else do we have here? Antipar Minerals down 15.6%. Pretty big turnover there as well. AZY. Let's have a quick look. They have $17 million Citadel joint venture interest sale completes. Okay, let's move on. And finally, we also have Newmont, which I'll talk about later in the video. And other than that, nothing much to talk about here. So let's go to the list by market cap. Newmont, PYC Therapeutics. Step 1. Let's have a look at Step 1's chart. I was getting interested in Step 1 because I thought the share price was getting to a nice a level where I thought there's going to be good value. And now it's getting to the point where I'm thinking, ooh, there's really good value with Step 1. I think maybe one of the reasons why the share price is dropping is because of a little bit of negative sentiment in retail right now. And I'll talk about that when we get to the top 5 stocks of the day. There is one company I want to chat. Now, I do have this blue line. That blue line is a nice little support line for Step 1. It's fallen through that today. So Step 1 has fallen through a support area or zone today. So not good for that company. Sydney Milk, Smart Parking, Genetic Signature, Smart Parking. Share price had been an uptrend, probably still is. Article, share price keeps on dropping. Pioneer Credit had a really good day yesterday, down today. That's natural enough. Okay, so let's get to the top 5 stocks of the day. And we'll start off with number 5, which means I can't put it into ComSec because this is the company that is not listed on the ASX. And that company, of course, is Tesla. Tesla did release their quarter results. And let's have a look at how the market reacted. Share price up 20%. Now, this is the chart for Tesla. So share price up 20%. You can just see here, this goes back to September 2023. So over the past year, share price has been all over the place. So when the company releases a quarterly report or some sort of has some sort of event and some people don't like it, share price can go up 20% or down 20%. It's one of the things I don't like about the American market, how fickle they seem to be. Not only fickle, they're very short-term focused. That's the other thing it seems to be. So that's why the share price of some of these companies can go on a run and then go back down to where it came from. Anyway, so right now, the market likes Tesla. So the few reasons why, it says that, few reasons why the market likes Tesla. Looks like they've, actually, in fact, what I can do, the financial numbers are actually pretty good. So I had a quick look at their statements, and operating cash flow, free cash flow positive by quite a bit. Nice growth, okay growth. Now the growth in Tesla vehicles being sold has flattened over the last 4 quarters or so. But here's the most important thing. But they do expect the growth to come back in a big way. In fact, I think what I've read, they're talking about 20 to 30% growth in vehicles. Now, initially, by the way, I am a shareholder of Tesla. Now, I was and have been in the past a bit of a Tesla bear. I thought this company was ridiculously overvalued because the way I looked at it, this is a car company. But they're a little bit more than a car company. And the whole reason why initially I bought shares was just to trade. And for some reason, because I bought shares, I actually did research on Tesla. And what I found was really intriguing. And we saw that a few days ago. If you go to, one of the reasons I like FinChat is, for instance, if you go to Tesla, and if you go to investor relations, I suppose I didn't have to do that Tesla bit. So if you have a look at the Tesla page, you've got overview, financials, investor relations, estimates, ownership, industry modeling, and filings. So you could look at filings like their financial statements, that sort of thing. But investor relations is really good. And you got transcript, report, and slide. So not that long ago, they had the We Robot 2024 day. Oh, Travis Axelrod. Billions, whoever watched Billions would know about Axelrod. Not this guy, but Anyway, so when they did that We Robot, the market didn't like it for some reason. So they announced, they're going to still be selling robots, and I think Elon Musk said eventually everyone will want a robot, which might be true. And they also, I think they were discussing autonomy or no, robo taxis. And in my opinion, this is just my opinion, there will be a time, not sure when, there will be a time when humans won't be allowed to drive. Yes, there will be a time when humans won't be allowed to drive. And eventually, we'll lose that skill on how to drive because of autonomy. And the simple reason behind that, and if you think about this, so they monitor us now doing everything. So you could say they're over nannying us. When we're talking about on our phones, they've got the phones, cameras, that sort of thing. And they always say, we're doing this to drop the fatalities on the road. We're doing this for you. This is why we put all these speed cameras in, these mobile phone cameras, all these stuff in, because we want the fatalities on the road to drop. So that's fair enough. Now, a cynical part of me thinks, no, they're doing this to raise the money they get from the fines. Now, that is a bit of a cynical thing, but I also think they believe that more people dying on the roads is not a good thing. But if you compare to the amount of crashes with autonomous vehicles to the amount of crashes that humans cause, it's night and day difference. I think it's tenfold difference, in fact. So eventually we'll go to autonomous vehicles because it's much safer, much, much safer. And eventually everything will be automated on the road. Absolutely. Unless we develop teleportation, which we all hope that actually happens. Anyway, so that is something that we'll eventually be moving towards. So robo-taxis, that sort of thing, will become a real thing. I'm not so certain about the robots just yet, but if they do it, if they succeed in doing it, and the people who buy a robot and it does all the cooking for them, cleaning, the mowing, does everything, all the chores, that would be perfect. I'd love that. I personally would love that, but I did hear the price will be $30,000. Anyway, so the main reason I'm talking about all this is because Tesla is way more than just a car company. In fact, if they're successful with some of the things they're trying to achieve, the company will be significantly higher, the valuation of the company will be significantly higher than it is right now. It's one of the reasons I like the big companies in America, the Teslas, the Alphabets, even Amazon, Apple to a low extent, Microsoft, is because they've got their fingers in all the pies that are going to lead humanity forward over the next 100 years. They know what's going to be, what's coming up. They know what's going to drive the productivity, that sort of thing, over the next 100 years. And that's why I've heavily invested in those companies. Not all of them, I think, will absolutely succeed, but a few of them will. Anyway, so Tesla, coming in number 5, they did release their quarter report. The one thing about the chart, I'll go back to the chart, there is a bit of resistance in this zone. That's probably my one little, if you have a look at the week, yeah, there's a bit of resistance in this zone. So the share price, you can see, once it gets above about $260, there is a bit of resistance there. So we need to see the share price keep on going on a run. Anyway, Tesla, coming in number 5. I know it's not an ASX company, but up 20%. And I just wanted to say, hey, it's a good day for that company. Now, coming in number 4, we have Metcash. Share price has been under pressure. Well, we're in the closing auction, by the way, 3:04 p.m. local time, 4:04 in daylight saving people time. And Metcash down 2.88%. Looks like potentially it might be down further in the closing auction. They did release a trading update today. Here's a case where the market got it absolutely right. We'll have a look at the chart in a second. So the market's saying, oh, something's up with Metcash. We have to sell. We want to sell. And today they've released a trading update. It's negative. It's a negative trading update. And I think the market was real on top of this. Okay. When you look at some of the numbers, you might say, well, it's not that bad. So sales year to date versus previous corresponding period, it's mostly positive. There's one that's not positive. That's liquor wholesale sales to on-premise customers down 0.4%. So I actually did have a look at this and I went, oh, it's not that bad. Although you could say total supermarkets convenience up 3%. But negative 1.8%, including tobacco. So something's happening with tobacco, it looks like. I don't know. Anyway, so it's not really the numbers here. And it started off, the commentary started off pretty good. But when we get to the next page, things start to seem a little bit more gloomy. And I think this is one of the reasons why staples are down today, and even some of the discretionary companies like SEP1 might be down, just because of some of the commentary in the Metcash's announcement. Okay, so the thought about the external market for independent hardware group continue to be very challenging, and don't use the word very. That's what I've been told. Don't use the word very. It's lazy and shows you have no hold of the English language. Yes, I was told that. You can't come up with a better word. So there must be a better word. There must be one word that you can use in place of very challenging. I can't think of it right now. It's why people use very, because they can't think of that extra word. Anyway, very challenging with trade activity softening even further. It's not a good start there. It was also noted that retail store margins in IHG, which is Independent Hardware Group, were facing pressure due to the impact of lower volumes on fixed costs. Since that update, so this is sort of new information now, since that update, there have been additional margin pressure in retail stores in September, October. That's not good. Margin pressures are not good. In fact, the company of the day, or the stock of the day, went the complete opposite. They saw the margins increase. And I love when a company increases the margins, because it can do special things when it comes to profit, which I'll talk about when we get to the stock of the day. Anyway, so additional pressure margins, particularly in trade due to further sales weakness. This weakness in retail stores have been offset by lower margin wholesale sales. Metcash is responding to the weaker trading conditions in hardware by implementing additional cost management initiatives and accelerating its strategic initiatives. Anyway, so that was talking about hardware. And yeah, that was probably the most negative part of the announcement. And the market didn't like it. Share price down a little bit. But it's how the market, the whole reason why this company is in the top 5 stocks is because of how the market reacted leading up to this update. If the market didn't do anything, if the share price didn't drop, and the share price only dropped 2% today, I probably would have skipped straight past Metcash to another company. Anyway, so let's have a look at the chart for Metcash. And we can see a massive drop. I forget why it dropped 22nd. Was it a negative broker report or something like that, someone selling? And not only that, the share price broke through support. So you had the two things going badly for Metcash on that day. A negative broker report or something, and the share price broke through support, and the share price has kept on tumbling. So share price has fallen from $3.50 down to $3.20. The closing auction is nearing, and indicator price looks like it will be about $3.15. I'd say between $3.20 and $3.15. Anyway, so the chart looks pretty bad right now. Now, maybe there is some value the further it drops. Where would I like to see Metcash share price drop before I go, ooh, value here? I probably would prefer it to drop to, say, $2.50. So between $2 and $2.50, I could consider going, ooh, this is starting to look pretty good value. I just want to delay this to $3.10, but I want to move on to the next company. So that's Metcash coming in at number 4. Coming in number 3, we have this HMC Capital. Now, the chart for this is fantastic. Fantastic looking chart. Share price up 11.3%. Indicated price another 5% higher. I don't know if that's going to happen, but if it does, this is going to be a pretty good day for this company. Now, the company is making an acquisition, and they're also doing a capital raising, but it's what they're acquiring has the market excited. So let's have a look at HMC Capital. So what does this company do? They do stuff. In fact, let's go to Market Index, because I actually did read what they do. Here it goes. HMC Capital, formerly known as Home Consortium, is an ASX-listed diversified alternative asset manager focused on real estate, private equity, and here's the most important thing, energy transition, and digital infrastructure. I'm pretty sure I've talked about this company in the past, and I probably should have bought shares, probably. Anyway, so let's go to the announcement the company released today. We're actually very close to the closing auction. Oh, you can see the indicator price is way down now. So when we do have a closing auction, share price won't be up all that much from where it closed in normal trading. There it is. It's come in, and it takes a while for the system to, $10.36. We can go to Metcash now. Share price dropped to $3.19. So I said between $3.15, $3.20, $3.19. Okay, let's go back to Home Consortium or HMC Capital. What was this acquisition? What has caused the market to get quite excited about this company? And probably rightly so. They're also doing a $300 million capital raising or placement. HMC to establish global DigiCo platform and equity raising. What are they acquiring? And I actually did read this and went, "Ooh, I can see why the market is liking this." Okay, so there are now some key initiatives to establish a global digital infrastructure platform, which is that global DigiCo platform, compromising the global DigiCo infrastructure REIT, intend to be listed on the ASX alongside a new institutional unlisted fund. Okay, so that's one first thing. And the second thing, acquisition of Global Switch Australia, a highly strategic 26 megawatt co-location data center located in Sydney CBD for $1.937 billion as a seed asset for the Global DigiCo platform. So they're acquiring a data center, and that's all you have to do to get the market excited these days. Anyway, also a trading update. I actually completely missed the trading update. So 24% growth in earnings per share, dividend per share at 12 cents. Placement proceeds are intended to deliver 20% plus return on invested capital target. Now, if they achieve that, that's probably funds well spent, or probably the best way to say that, funds well utilized. Anyway, so let's have a look at the chart. I've already mentioned this is an awesome looking chart. HMC could be one of the best charts on the ASX. One of, not saying the, but one of. Oh, that's a weekly chart, by the way. Let's have a look at the daily chart. Oh, by the way, so there was a nice little resistance level at about $8.50. Those are highs back in late 2021, 2022. And it's just broken through that like nothing. The other day, 2 weeks ago. Anyway, so beautiful looking daily chart. Share price broke out back in December at about $5.50, and share price just keeps on going up. So beautiful looking chart for HMC Capital. You can see the share price bounced off the resistance level in early September and then went through on the 4th of October. So it took 1 month for the share price to get above that resistance level at $8.50, and now the share price is at an all-time high. Okay, so that's HMC Capital. Coming in number 3, a beautiful looking chart. Coming in number 2, a company that's been in the news all week, it's WiseTech. Share price up 12.71%. Now, funny enough, yesterday, I just mentioned, I forget what I mentioned about WiseTech, but was it even in my top 5? No, it wasn't. It was in my top 5 a few days ago, I believe. Anyway, so probably the most important announcement this company released in the last 24 hours was released at 4:36 p.m. Key business update. And you probably already know what the news is. So Richard White, the founder, the CEO, who has been being a naughty boy, doing inappropriate behavior with his ex-girlfriend or something. I don't know. It's just weird that there's inappropriate behavior, but there's no charges against him, so it can't be that bad. Anyway, maybe I'm just being ignorant. Anyway, so he's a CEO and executive director. The board has agreed, following Mr. White's request, that he will stand down as director and as CEO with immediate effect, take a short period of leave, which he probably needs, and transition into a new role with the company that he founded and has led for 30 years. When Mr. White returns from leave, he will commence a new full-time, long-term consulting role focused on product and business development, and key terms of this arrangement are set out below. The market liked it. I'm actually a little bit surprised. I thought, Richard White, who has grown this company from nothing over the last 30 years to what it is today, a behemoth, absolute behemoth. I thought maybe the market wouldn't like this. Well, the market has spoken. The market liked it. Share price up 12.71%. Now, this could be a bit of a bounce because the share price has fallen a lot, but I like the very fact that we have seen change. We're seeing change now. And maybe if he didn't resign from his roles with WiseTech, this could have dragged on and it could have led to the share price dropping even further. So I think he has made a decision that this is the best thing for the company, and it seems like the market has agreed. So let's have a look at the chart for WiseTech. And there were quite a few people saying, oh, now's the time to buy, or maybe just going to wait to see it drop further. There was I put my sell price at about $100. It briefly fell below $100 yesterday. Actually, it briefly fell below $100 on, was it Monday? Yeah, Monday. It dropped yesterday to below $100, and that's where it closed. And so I was thinking, oh, it's actually fallen below my sell point. So I thought I'll just wait to see what happens over the next few days, because there is a bit of volatility with this share price of this company. And this is exactly why I don't set automatic stop losses, because I would have been stopped out of this if I did that at my stop loss price. That's why I like to just manually do it myself, because sometimes I like to give myself a little bit of time, a few days, just to see what happens, because a lot of times the share price will drop below a stop loss and then just rally after that. I see that time and time again. Some people would say, well, you've set your stop loss too high. Fine then, but no matter what happens, a lot of people will see their stop losses hit and then the share price rallies. In fact, the whole reason I don't set stop losses anymore is because that happened to me over 10 years ago. One of the first times I used a stop loss, I was being told you should use stop losses. First time I used it, I got stopped out of a company that pretty much sucks, but the share price kept on rallying. G8 Education, I believe, back in 2013. Anyway, so I decided, do I really need to use a stop loss? Because I look at the charts of companies I own every single day. I know when I might want to sell. And so WiseTech was near that point. Today, probably less so. Although there was a bit of selling today. Share price did get as high as $120, and share price has pulled back. So a bit of selling, which is probably understandable. So that's WiseTech coming in number 2 and coming in at number 1. I really hope the share price is up over 5%, 5.92%. I'm pretty sure it was up even more than that. So Resmed released their first quarter results. So whenever Resmed releases the results, I'm going to have a close look, paying particular attention to margins. So I bought Resmed 1 year ago when there was all this Ozempic fears. I just went, okay, I've never held this company before. This is what I'm looking for. I'm looking for the market to overreact, and I'm looking for opportunities to buy these sort of companies at a much better price. I'll show you the chart in a second. Okay, and when I bought Resmed and I started having a look at their results, the main thing that really stood out for me was their margins. Margins had been dropping, and I was thinking to myself, and I might even write this down somewhere. If Resmed starts to improve their margins, the share price would go on a significant rally. And so that's the first thing I was looking at, increasing margin. We need to see margins starting to increase. And we saw that either last quarter or 2 quarters ago. Margins started to expand again. That's a good sign. So when I saw Resmed release their quarter results, the first thing I was drawn to, didn't care about sales growth, because this company has fairly consistent sales growth. The first thing I focused on was the margins. And let's have a look. So revenue increased 11%. Yeah, sort of expected that. Gross margin improved 420 basis points to 58.6%. That's a pretty good increase in gross margins. So that's exactly what I want to see. I don't care about everything else. But the reason why margins improvement is important is because revenue increased 11%, but income from operations increased 34%, operating cash flow of $326 million, and earnings per share would have increased a fair bit as well. They don't give a percentage increase, but if you have margins increasing, that would lead to a high increase in profit versus increase in revenue, because it's an increase in margins. If you see margins dropping, if this company had a revenue increase of 11%, the profit might have only increased, or earnings per share might have only increased by 4% or 3%. The market doesn't like that. I don't like that. I want to see margins at least staying steady, if not increasing. And another reason why if you see margins decreasing, that could be a sign that competitors are chipping in. Competitors are, they're causing problems. And in fact, that's a sign that company doesn't have a moat or a very strong moat if they have to, decrease their margins because, they have to sell, they have to, maintain their relationships, they have to sell products. And the best way to sell products is to decrease their margins. If they can't decrease their spending or the costs of sale, the cost of, what do we call it? Cost of sales. Yeah, cost of sales. So the imports, if they can't decrease the cost of imports, and if there's competitors out there, they have to decrease the price they sell their products, which will have a significant impact on margins. So margins are one of the things I look at in determining whether a company has a good moat, a strong moat. And so if you see gross margins increasing, that's a sign a company has a building moat. And this is really important when it comes to brand recognition. So Coca-Cola, when they had no brand, their margins are probably fairly low. Today, Coca-Cola can increase the price of their drinks, probably their Coca-Cola, the cans or bottles, and people still buy them because brand recognition. Coca-Cola. Yeah, anyway. So, yeah, Resmed, gross margins up. That's all I cared about here. And share price up 5.92%. My expectations were probably around that level. Yeah. And the chart for Resmed looks absolutely fantastic. In fact, before that, I'm going to have a look at FinChart because this company is dual listed and they would have released let's go to Resmed, the Americans. And I'm just seeing if they've already released, there we go. They've already released their quarterly report on FinChat. The thing I want to see if they've released on FinChat is their quarterly numbers. So you can do that. So they have an annual, quarterly, semi, and trailing. So I'm just going to quarterly in Resmed's FinChat's page. And they don't have it there just yet. They just have June 24. But the reason I wanted, or what I was going to have a look at, is just the gross margins. So what was it, 58.6%, if I remember correctly? So I'm just going to go gross margins. It should be in, where is it? It's margins. There it is. Gross profit margin. And there it is. Yeah. So you can see gross margins are actually dropping from March 2022 through to September 2023. In the last 3 quarters, gross margins have increased from 55.2%. It says 59.2%, but I think this is a little bit different. Anyway, so this is what I'm looking for. So we've seen gross margins starting to increase for Resmed, and this has been happening the last few quarters. So just look at this particular gross profit margin chart, and now let's have a look at this chart for Resmed. And you can see there is a bit of similarities there. So share price of Resmed was under threat, and that's when the gross margins was dropping. Share price reached a floor back in September, October last year, and since then, the gross margins have been improving. At the same time, look at the chart. Share price has been improving as well. Share price today got to about $38, and the last time the share price was as high as it did get today was actually back in September 2021. So we're talking about a 3-year high in Resmed's price. Okay, so chart's starting to look, not starting, it does look pretty good. And I'm thinking of taking some profits because I bought quite a few shares in Resmed, and I'm thinking of now taking profits, not selling completely, but just taking some profits. Okay, so that's Resmed coming in at number 1, the stock of the day. Now, let's have a look at some of the honourable mentions. Some companies that did not make it. Now, I talked about Newmont yesterday, I think. Yes. And I would have included today as well, but share price down 13%. Now, this is Newmont on the New York Stock Exchange. So you can see the horrible day yesterday for them, or overnight for them. Now, Newmont on Australia, bad day yesterday, but even worse day today, down 13.3%. Is this a buy the dip situation for a Newmont? Maybe. Is the market overreacting? Maybe. I don't know, but it could be. And this is after the share price was in a beautiful run. So a lot of times you will see the share price or companies release, if you see the share price in an uptrend, companies more likely to release positive updates, not negative, but not always. This is the case With share price in a beautiful uptrend, company releases a negative update. But it's a mining company. Maybe that has something to do with it. So that's Newmont. What else do we have here? Aussie Broadband. They did release an update. Very close to getting into, I use the word very, quite close to getting into the top 5 stocks of the day. But the share price didn't quite respond as well as I hoped. Share price was up 3.8%, no, 3.7%, and not really a breakout. I really wanted to see a share price get above $4. If the share price got above $4, that would be a nice little breakout for Aussie Broadband. But share price is moving in the right direction. The company's metrics are moving in the right direction. And the other reason I decided not to include Aussie Broadband in the top 5 stocks of the day is because I own Aussie Broadband and I bought more shares the last time the market has a hissy fit about this company. That was back in July. Remember, they released a negative trading update. So they released news of this new buddy, a new like a internet sign-ups, internet thingy for cheap people. Anyway, and they had to decrease their expected profit or EBITDA or whatever by the amount of money they were spending on this buddy initiative, and everyone reported it as a profit downgrade. Well, actually, it wasn't a profit downgrade if you read what they're doing. So the share price got as low as $2.90. So I bought around $3 if I remember correctly. And maybe I should actually take profits. Share price up 33% since then. So again, that's another instance of the market overreacting, not really understanding what they were reading. I still don't understand why the market was selling. Don't even understand why. There was one person on Ausbiz the call, I won't mention his name, who actually said, Aussie Broadband just released a profit downgrade. It was not a profit downgrade. Anyway, let's move on to the next company. Whitehaven Coal. This probably is a company that would have come in at number 6. And maybe the only reason why I decided not to include Whitehaven is because the chart doesn't look that good. They did release their quarterly report, share price up 5.5%, but the chart is just, I'm not a fan of this chart. There's no trend. If anything, you might say it's more in a downtrend, if anything. So Whitehaven Coal, nice quarterly report. In fact, I did read, all they did was confirm guidance. And it's not a reason to get excited. A company called COG Financial, COG, I just call them COG. COG Financial Services, share price down 3.4%. Did a trading results, on audited trading results for the first quarter. Not moving in the right direction just yet for COG, and the chart looks negative. Coventry Group also released a trading update, just seeing if the share price did anything today. The answer to that is no, up a little bit. Chart, not for me. And Cleanaway had their AGM. This is a better looking chart, a slow grinding uptrend. I do like these slow grinding uptrends. Share price down slightly. So let's move on to your questions. I do have a few questions, I think. First one is Tinker312 says, have you looked at Dell before? Delorean. I believe they might meet your buy criteria both technically and fundamentally. Well, that's interesting. So let's have a look at chart for Dell. And why am I looking at a chart for Dell? Well, a lot of times when I buy Delorean, a lot of times when I buy or take a position in a company, I put a little note where I bought it at. Here is me buying at 9.8 cents on, what day was that? The 20th of September. Why did I buy at 9.8? Share price zoomed up. Share price dipped back. It dipped back below 10 cents. I was thinking, ooh, it's dropped below 10 cents. I want to take a position because I think the share price will get higher than 10 cents and possibly go on a run. And that's exactly what it did. 1, 2, 3, 4, 5 or 6 trading days after I bought. Share price went on a really good run. In fact, share price went from 10 cents up to 15 cents in like that. I do like this chart. The one thing I like to see is higher volume coming in. We saw a big volume day on the 23rd of July. That was a breakout for this company. The company will be releasing their Appendix 4C. I'm pretty sure they're profitable and also cash flow positive. And that's another added benefit to this company. That this company is moving in the right direction. So have a look at Delorean. Let's have a look. Actually, let's have a quick look at their most recent Appendix 4C. This was a weird one because there was a little bit of confusion, if I remember correctly. So Delorean does, what's the best way to talk about Delorean? They are energy stuff, renewable energy stuff. Renewable energy stuff. So let's have a look at their about section first, because they probably can do a better job of their about, of what they do. They don't have an about section. Oh, here it is. It's there. Oh no. They've got an about section here, but all they say is shares in this company are traded on the ASX. Anyway, yeah, it's renewable energy, that sort of thing. Here we go. Delorean is a vertically integrated business operating in two high-growth investment sectors, renewable energy and waste management. There you go. Anyway, let's go to the Appendix 4C, the last quarter. There was a little bit of confusion here. So company had receipts of $11.9 million and were operating cash flow positive $4 million. But some people were confused by this LGC shortfall charges refund, $4.7 million. If you take that away, the company was actually operating cash flow negative. But apparently, if I remember correctly, because I did look at this, this is an ongoing thing. This is something they will receive on an ongoing basis. Not every single quarter, I think, but they will receive this shortfall quite often. It's one of the things they do receive because something to do with energy or renewable energy. I don't know. I don't understand it, but it is something. So the company is profitable, I think, or very close to being profitable, operating cash flow, free cash flow positive, that sort of thing, moving in the right direction. It's a sort of an in thing to renewable energy. Waste management is very important as well. So they have their toes in the right areas. And so I do like the business or the space they're in. I do like the financials, and I also like the chart. So it all comes together. So that's Delorean. Mr. Chokes, what do you think about Metals X? Markup is around 400 million, cash of 182 million, also have investments around 50 million. Quarterly, they're getting around 15 million from current operation as a profit. So this is a mining company. I'm pretty sure they're 10. I could be mistaken. I'm pretty sure Metals X is 10. Have they released their quarterly report yet? Up 9.4%. Oh, they've made an unsolicited approach to green tech yesterday. Yes, activities report 2 days ago. I'm pretty certain they are 10. Do they do anything else other than 10? Now, do they have an about section? No, I think it should be a law. You need to do an about section. Now, they should have what they've mined here and just mention what they actually do mine. They also looks like they have some investments in other companies as well. Here we go. The Bluestone Mines, Tasmania, JV Renison tin operation. I just wanted to see, I knew they were 10, but I just wanted to see if they've got anything other than 10. Okay, so the most important thing when it comes to Metals X is tin. What's the tin market like? And we know the share price of Metals X is going to follow tin prices. In fact, I do have tin somewhere here. What is tin? There it is. This is tin. Says this is the tin chart, tin futures, SN1. And there's no trend really in tin, as I can see just here. And if we have a look at Metals X, is it similar then? Yeah, it's fairly similar, isn't it? So not identical, but it's fairly similar. Good day for Metals X today, but there's no trend. Share price going sideways. So the most important thing for me is when it comes to a company like this is the underlying commodity. So what's happening with tin? If I see tin moving into an uptrend, I would take a position in Metals X, no worries. I don't care about, to be honest with you, I don't care about all these financials because that's irrelevant because the share price of Metals X will follow the price of tin. Not perfectly, but it will travel, or will follow, be correlated to the price of tin. So that's the most important thing when it comes to a company like this. That's why I was trying to find out if they were mining anything other than tin. I do like the available cash flow. I do like that. And there is a possibility the company is really undervalued. Anyway, so thank you for that on Metals X. Terry Casson, what is it with the hairs at the moment? Hairs, adares, adheres. I do like some funny comments. So leave as many funny comments as you want. Asia, Australia down yesterday due to US election. Well, a lot of people are going to say that. Is it? I don't know. No one knows. WiseTech stands down after bullying, down 6%. Well, technically he was down. He stood down after the market had closed, and today we have seen the share price rally. Adez, 17, nearly 500. Lucky guess. Oh, then he started talking about Tesla. There we go. Yeah, I didn't look at McDonald's results. Let's have a look at the chart for McDonald's. Would I ever buy McDonald's shares? Probably not. Okay, so I don't trade US stocks at all. I just buy them for the long term. So when I talk about an American company, I'm just talking about the long term. Do I spell that right? There's no McDonald's here. McDonald. Here it is, McDonald's Corporation. MCD. Well, funny enough, the share price dropped the other day, dropped 5%. The share price was in a nice little run. Thank you that's Rick Thellion. And that's it. Not many comments. And that's good because I'm already 1 hour long. Okay, so that's it for today's video. If you have any questions, any thoughts, leave those in the comment section of this particular video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.